Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all the Wall Street hype. And as we always say, the charts tell the truth. Now, as we get into today's video, I want to go over some key stuff that happens in today's market. You had a lot of bearish news coming out between yesterday and today, and ultimately it didn't matter. We noticed a bunch of indicators throughout the day that pointed to a rally late in the day, and sure enough, the market did not disappoint. You see right here on the chart, and this is the intraday ES 10-minute, obviously the E-minis, the March '08 contract, and you can see here later in the day the massive rally that took place. Now, ultimately, the market only closed basically on the flat line, but the fact of the matter is we defended that February 7th low that you guys know we've been pounding, that is such a key level. All right. So early in the day, things were not looking good. Yesterday, after the bell, Intel came out and said, "Oh, it doesn't look like the margins are going to be as good. We're going to have some problems." Market sank. That hurt technology. Then this morning, Citigroup came out and said we may need more money, or speculators out there, investors said they may need more money, and sure enough, that hurt the financials. And throughout the day, we saw various indicators pointing to a drop in the market early, but ultimately rallying off the lows of February 7th. And you guys know we talked, and I mentioned this multiple times, that February 7th, in every video over the last couple of weeks, we've said is such a key level. And I'm going to go to the daily chart and show you guys the key levels, but ultimately that's where we hit today. In fact, the Nasdaq was even below intraday, but on the rally, it was able to go back above. So here you can see the intraday chart candle here, and you can see what had happened throughout the day. We had that early flat trading session, and it started to look a lot like yesterday's trading. Very flat, very, negative, slight negative bias, and then all of a sudden we started to break down. And you can see right here how the market moved right into the 50 moving average on the ES futures, and ultimately you saw those tails formations. Look, notice the tails right here. That's giving us an indicator in some stretch there that you're going to see a little bit of a pullback, and ultimately you do. And what you can look at that is it's in a way a topping tail. It's not a perfect example of one, but when you see tails form on the tops of things and it always pulls back, it's telling you that there's a lot of sellers meeting that point. So it's obviously they're forcing the price down by selling into that, and ultimately it's right at that moving average, and you see the fall that ensued following that. So you had a fall, a small bounce, a little bit of a fall again, an even nicer bounce, and then we started to look like we were going to get weak and break down. Now this is where things get interesting, and I'll go over the keys why we saw this rally coming, and you can go into the chat room and talk to anyone in the chat room you want. They'll confirm that. But what you can see here is that we had another push down, breaking the lows, but you never closed below the low. All right, so here's the low. You push down, you were below it, but ultimately they saved it and pushed above. Now notice here on the 20 moving average, you're seeing multiple hits of the 20 moving average to the upside. All right, and we use the door analogy because it's such a great analogy. You hit the door enough times, you're going to break out to the upside. So even while the market's trending in this downtrend, you see how you have on the upside the 20 moving average getting hit once, getting hit twice, getting hit 3 times, 4, and on the 5th time it bursts through. Now, there were a couple reasons for the catalyst, news-oriented, nothing really important. Ultimately, you need to follow the charts, but there were some more talk of bailouts coming and so forth, and that's the general catalyst according to the news. Now, on the charts, this pattern right here is telling you that something's going to go on. You break this 20 moving average, you knew it's going to be a big move because of the way this formation was forming. So take a close look at that, and keep in mind that you're having the multiple hits of that moving average, and it's all in a straight line down. So you have a nice trend line formation right along that 20 moving average. Notice how you get that thrust, and then a pullback, which is a consolidation, and then a thrust again. That's another great pattern in this market that we found, and it continues to reap tons of rewards for us in the chat room, as this play in the market on the ES futures and the SPY was played by multiple individuals in the chat room and called out by our head E-mini trader. All right. So again, notice how you came up all the way here on this massive rally to the 200 intraday moving average, and then look, you started to stall out, and that's normal. All right. You're going to have major resistance at that 200. You get some of those topping tails in there as well, and the market tries to sell off, but there's a lot of buying as well. The reversal here was humongous. All right. It's a big deal, and not only that, but the fact that you held the February 7th lows, which we pointed to as being so key in this market, is a major reason for why we anticipated the market having one more move up. This may be the start of it, it may be not. Anything can happen, but ultimately you defend a day like this on the markets on the February 7th lows. That's a very, very bullish situation. So let's go to the SPY daily chart. Now we're looking at the daily, so we get a broader time frame of what's going on. And you can see the February lows here, okay, just drawing a straight line across. And notice how we were even below that on the SPY today. we did break down below that, and ultimately we did save it, and in fact you have a very nice tail there. Now, we noticed a bunch of factors, as I mentioned. Part of it had to do with the VIX. Part of it was the calculations that we do here, that we found work very nicely. The proprietary analysis techniques as well. And you need to come join the chat room, and we do divulge some of those in the chat room. And you can take the seminars, webinars, anything you want to find that stuff out. We will talk to you about it. We'll give you some insight into that, although it is pretty complex. Now, notice again, we were below, and they rallied the market back above. So it's a technical hold of that February 7th low. Not only that, but you have a nice little tail on the bottom there, and the same tail pops up on the Nasdaq. So let's take a look at the Nasdaq on the daily. And the Nasdaq, we had mentioned, has been the weaker index. There's no doubt about it. You can look at the SPY, how it's been trading over the last few days, the last weeks, I should say, and you can see how you have a general trend like that until the fall recently, back to the February 7th low, which was defended today. Look at the Nasdaq now. It's a much flatter move, okay? You basically even have almost like a little bit of a downtrend, but we'll call it flat for now until the breakdown. And here's the low right here, and this is what had to be defended. All right, if you got to close below here on a February 7th low, we talked that you'd most likely revisit the January lows, okay? And the key here was it had to hold up. And sure enough, it looked pretty ugly early in the day. I'm not going to, BS anyone here. It looked very, very ugly in the day. But ultimately, you got that rally. They came in and saved this market. Trust me, everyone out there knows that level is key, and it will be the sell-off should we break that February 7th low back to January lows, and most likely lower in the long term. Now, as I always say, you got to take things in a small time frame. We're here traders. We trade relatively near term. Swing trades will be a couple weeks, maybe even less. Day trades are, intraday. So we're not looking at the broad time frame here. We're not looking at over the next month or two. Ultimately, we think the market's going to come down to the January lows and go lower, but you have to play the near-term moves. Entry is everything, as we always say, and if you're in this trade here, you're going to be buying on that February 7th low with a tiny little stop right below that breakdown point should we close and confirm that. Here on the upside, if you had bought right on that line, you're in the money nicely here. We had a nice swing trade posted out today, which got triggered on a move down and is nicely in the money now, and we'll continue to hopefully get a move back up on that. All right, so again, notice how the Nasdaq was even farther below on this weaker pattern, but did close still above, right here above that line, and that is a bullish sign. All right, guys, so keep in mind, very bullish activity today late in the day, and it looks like there will be a bailout, and we mentioned this yesterday in the video. It doesn't matter how you cut it, rate cuts are not enough. It's kind of like, I broke my leg and someone's giving me painkillers, but they're not actually fixing the problem. And I don't want to go out on a limb and say, okay, well, bailouts will fix the problem, because it's ultimately going to cause a new problem. But in any case, they have to put the splint in and hold the leg in place here, and that's going to take a bailout, in my opinion, and our opinions here. So we do expect something to come out. Now, whether or not the market factors it in even before it comes out, or what type of bailout it is, we don't know yet. But the market was anticipating something later today, and that is why you saw a nice move in the rally mode. All right, so again, interesting day, there's no doubt about it. Just to go over the indexes as we were talking about it, you saw the Dow still down slightly here, down 45 points. The Nasdaq was up about 2 points, and the S&P was down about 4.5. So ultimately, the Citigroup news held the financials a little lower than we would have, or you would have expected, considering the nice rally. But again, Citigroup news very, very bearish. It looks like there's some talk that they're going to need more money infusion, although they did come out intraday and say that wasn't true. They feel that they feel like they have enough money by far to manage the situation. All right. Just to focus in on a couple different charts of stocks here, we saw ultimately all the large cap tech stocks, the four horsemen we talk about, all but one were very, very strong today. You saw Baidu up about $5.60. Here's the chart on Baidu. You see that nice reversal of the upside on the daily, and here you can see the major breakout with the market late in the day. This is the intraday. On Research in Motion, they defended 100. Now, 100 is key on Research in Motion. It's been key for a while. They got the stock back above 100 recently, and today they successfully defended that. The stock price was as low as $98 on the down move, but they rallied it back to 104.66 at the close on this massive late-day rally. All right, now just focusing on Apple. Apple had a shareholders meeting today where they talked to some decent talk, but they also said they were not going to do a share buyback at this level, and that did hurt the stock early in the day, but they still got it up on this massive rally. Amazon had a great day, up $2.91. Now, the one lagger here was Google. Google continues to just see massive amounts of weakness. Look at this chart on Google. This is since January of 2008, the beginning of the year, and look at that fall. I mean, this is not anything to laugh at, folks. This is an amazing fall, and We also saw some major pullbacks across the board in oil and gold. Now, the interesting thing is, I believe Kramer actually pumped gold and oil yesterday, at least oil there, and we've been saying you got to expect a pullback here. So we're right on top of this move again to the downside, and you have to expect. Look at how far. You guys know our rule. When you get that far away from the 20 moving average, you need a pullback and to at least touch that moving average before you expect a bounce. So there's no reason to buy it up here, no reason to buy it up here or up here. This is dead short territory, in fact, because you know eventually it's going to come back to this 20 moving average. Everything always comes home to that 20, guys. The same goes with the 50, should it be long enough, although that can last a much longer time period than the 20 moving average. All right, guys, come join the chat room. You guys know we're doing e-minis in the chat again, so just sign up under the, for now, we'll have the link up to purchase the e-minis, but you can just get in by purchasing the day trading chat. It's the same chat room. We're doing e-mini calls now. Come join the swing trade alerts. We're going to be having another webinar date posted on the